What's up, everyone? This is Khurram. So it finally occurred, and we are celebrating today. For more than 7 years, my credit score has never topped the renowned 800 score. I got it up to 798 once, but it couldn't go much further than that. That was until recently when I conquered this barrier. We did it. The credit overlords have showered their glory, and my score has now surpassed the 800 mark, which most people believe to be a perfect score. This also means that I can finally post a video on YouTube detailing how to obtain a perfect score. So here's why this is all important in the first place. Your credit score is essentially a report card of how well you manage your money. Just as in school, you'll do well on exams and tests to obtain a decent mark, but in real life, you'll manage your money properly and have a good credit score. It has a practical purpose in that it can save you a lot of money, or better yet, make you a lot of money. A solid credit score allows you to acquire the lowest interest rate, whether you want to leverage your money in real estate, company, or just life. It is how I get thousands of dollars back in free closing expenses whenever I refinance or purchase a home. It is how I obtain such low interest rates on everything I buy. It is almost like I'm getting free money. It is also how I get approved for almost any credit card sign-up bonus I apply for, which is just another way I get more free stuff. So don't wait, I guarantee this video will easily save or make you a few $1,000s at the very least if you just follow it. It wouldn't take you long, it'll be simple, and the greatest part is that you wouldn't have to spend any money to earn an 800 score. So it's completely free to do. Again, it will only take a little of your time. All I need in exchange is a fast like on the video to help the YouTube algorithm. And if you're feeling kind today, leave a comment below to help push it up too. So if you don't mind, just like and comment, and that's it. Otherwise, please enjoy the video. To understand how you can earn a perfect score, you must first understand how the system scores you. As I previously stated, just as your class grades you differently for homework, test assignments, attendance, your credit score grades you on a variety of factors as well. So if you want a perfect score, you must excel in all of them. The first factor that influences your credit score is your on-time payment history, which accounts for 35% of it. I repeat, the first factor that influences your credit score is your on-time payment history, which accounts for 35% of it. Now, this one is very simple. Never skip a credit card payment and never pay it off late. To achieve a perfect credit score, you must make all of your payments on time. Otherwise, it may wreck everything. Now, let me explain how this works and how it is calculated. The credit gods examine all of your on-time payments and divide them by your total payments. They then assess the percentage of your payments that were made on time. Now, here is an example. Let's imagine you have had one credit card for 60 months and you missed one payment. That implies the creditor takes 59 on-time payments, divides them by 60 total payments, and you get a payment ratio of 98.3%. And as you see from the Credit Karma Score calculator, that places you in the yellow category, which is not good. This is unacceptable if you wish to achieve a perfect score. In a separate example, suppose you have had two credit cards for 60 months each and you miss one payment. So now you have 120 credit payments between the two credit cards, which indicates they accept 119 on-time payments, divide by 120 total payments between the two cards. That implies that you have paid 99.1% on-time payment, putting you in the green category for Credit Karma, which is somewhat better. For another example, suppose you are new to credit building, have one credit card, have had it for 15 months, and you miss one payment. So the same computation still applies. You have 14 on-time payments, divide that by 15 total payments, and you have only paid 93.3% on time, which is unacceptable. That is extremely awful. Credit Karma says it's in the red. Therefore, you can pass go. However, you may avoid this by not only not missing payments in the first place, but also having more credit accessible to you for a longer length of time. So that if you do miss a payment, it has a much smaller impact on you. For example, having 10 credit cards open for 5 years would result in 600 total payments. So even if you miss one by mistake, you would still have paid 99.8% on time, which isn't end of the world when it comes to paying off a credit card on time. The really good news is that they will only regard it as an on-time payment if you make the minimum payment per month, which is usually between $25 and $50. So even if you can't afford to pay off your credit card account in full, even making the minimum payment on time every month will help you maintain your credit score in this category. As previously said, all of this is the most crucial component of your score, accounting for 35% of its value. Now, the second component that determines your credit score is credit utilization, which accounts for 30% of your credit score. In order to earn a perfect credit score, the credit agencies simply want to know that you aren't maxing out your credit cards. Ensure that you are only utilizing a small portion of the credit limit available to you. Ideally, you want to spend less than 10% of your whole credit limit, demonstrating to the credit gods that you don't need all of the money they've given you because you are so wonderful with it. If you're still confused, here is how it works and how it is computed. Assume you have a credit card with a $10,000 limit, and you go out and spend $6,000 followed by making the minimum payment. At that point, you perform the math and discover that you are consuming 60% of your credit limit, putting you in the red category, which is awful. As a result of carrying a bigger load, you are perceived as a riskier borrower, which irritates the credit bureaus and causes them to reduce your credit score. On the other hand, if you have the same credit card with a $10,000 limit and spend $6,000 but pay it off in full when it is due, you now owe $0 on a $10,000 credit line, indicating that you have 0% credit utilization, which makes the credit bureaus happy and puts you in the green category. There are several workarounds. However, because the almighty credit gods are not concerned with the dollar amount, it represents the percentage of credit that you really use. So if you have a $300 credit line and spend $300, you have maxed out your card, resulting in 100% credit use, which is really undesirable. However, if you spend the same $300 again with having a $30,000 credit line, you will have a credit utilization rate of only 1%, which is excellent. Now, one of the tactics I utilize to help with this, to have a large number of accessible credit cards, all with high credit limits. For example, I currently have over 14 credit cards, many of which have credit lines of more than $30,000. Now, I'm never going to spend that much money, but it will come in handy if I decide to spend $10,000 or more on home remodeling. And I can still maintain a very low credit utilization because I have so much credit accessible to me. There's a myth out there that says you should keep a little amount on your credit card at the end of each month so the credit bureaus has something to report. And this is false. Keeping a credit card balance will not help you improve your credit score. And it will only cost you extra money and interest. So it is always best to pay it off in whole by the due date and never carry a credit card debt. So if you want to achieve a flawless credit score, you should strive to keep a balance of 5% or less of your available credit limit. That doesn't mean you can't go out and spend more than 5% of your available credit, but it does imply you should pay it off before the statement cycle ends so the credit bureaus has less to report on. Furthermore, it will assist you in obtaining more credit cards, as counterintuitive as that may seem, because this will help boost the total credit limit you have available to you, hence decreasing the overall credit use. Finally, I strongly urge that you request a credit limit increase on your credit cards every 6 months to 12 months. This manner you will be consistently lowering your overall credit utilization while also working to enhance your score. Now, keep in mind that just because you have more credit does not mean that you should spend more money. I believe that goes with you without saying. All of this should be done as a strategy to assist you improve your credit score, rather than going out and buying additional unnecessary items. Finally, I would like to leave you with one last note. The amount of money you hold as a credit card balance will only be temporary. This is one of those things that will only have an effect on your score until you pay off your credit card, following which your score will improve. So whether you have a high utilization rate right now or in the near future, don't worry. Your credit score will return to normal as soon as you pay it off. Third, they believe that length is insignificant, although it is highly important when calculating your credit score because the average length of your credit history accounts for 15% of your entire credit score. I repeat, the average length of your credit history accounts for 15% of your entire credit score. This simply implies that the longer you have had credit and the sooner you start, the better. This is one of the reasons I strongly advise people to start building their credit as soon as possible, even it means applying for a credit card the day they turn 18. This will provide the groundwork for your credit history from the very beginning. Now, it is crucial to note that this is determined using the average length of your overall credit history, not the entire length. Now, let me clarify. Let's say you opened one credit card 4 years ago. That would suggest your typical credit history is 4 years. However, if you opened that one credit card 4 years ago and then opened another one today, your average credit history would be decreased to 2 years. Remember that it only takes the average. The same is true if you decide to close an old credit line. Since some people believe it is a good idea to close old credit cards that they no longer use. This could be disastrous because closing an old credit card, even if it remains on your account for 7 to 10 years, can reduce the average age of your subsequent accounts. And you would have to wait much longer to rebuild it. So my advice is to start developing your credit as soon as possible and keep all of your accounts in good standing for as long as feasible. This will help you develop a solid fortress of lengthy credit history so that when you apply for a new credit, it will have less of an impact on your account because you already have a lot of long-standing credit history. As a result, your score will be significantly lower. When it comes to all of this, the only thing you can do is wait. This part of improving your credit just takes time. So don't be discouraged if you have only recently obtained a credit card and have made a few on-time payments but don't yet have a 770 score. Patience is key with this one. So you may have to wait it out at times. In terms of how long you will have to wait, the Credit Karma Guide recommends that you have at least 9 years of average credit history to receive the top results. Even for me, my average account length is just over 4 years due to all of the new credit I've taken up recently. Even so, it doesn't make a tremendous impact because it only accounts for 15% of your total credit score, and I've done really well in every other category. The fourth factor in determining your credit score is the number of open line of credits. And this accounts for 10% of your overall score. Now, this is one of those things that you would think makes absolutely no sense. For example, why would you reward someone for getting new credit cards and taking out new loans? You would think that the individual who does not really need credit and have little would be the best one, right? But if you believe that way, you are mistaken. And here is why. First, the more credit you have, the higher your credit limit will be, which means your overall credit utilization will be lower, resulting in a higher score, if that makes sense. The second benefit of having greater credit is that you will be able to make more on-time payments, which, as previously said, will help you improve your credit score. Third, having a mix of credits such as mortgage and auto loan and a credit card demonstrate to lenders that you can manage various types of debt responsibly without defaulting. All of this sounds quite backwards, and a lot of it reminds me of the idea that we are only going to lend money to people who don't need it because they are the most likely to repay us. That, by the way, is quite accurate. Banks enjoy loaning you money when you don't need it. And when you do, you are perceived as a larger risk since you require it. So ultimately, you just need to become involved. This is how the system works. According to Credit Karma, the perfect score requires at least 21 line of credit. And for most people, I believe it will take a long time to build up to. But I wouldn't worry about it too much. It only accounts for 10% of your score. Although I would recommend you aim to diversify your credit profile over time, because in the long term, that is going to help you get an 800 plus credit score. Finally, the remaining 10% of your credit score is represented by the fifth component. This would be the total number of inquiries on your credit report. Now, here is how it works. Anytime you apply for a new credit card, it is reported to the credit bureaus and appears on your credit report as a hard inquiry. This allows lenders to keep track of how many times you go and seek for credit. In general, for more times you apply for credit, the riskier you become as a borrower. Lenders are concerned that you will suddenly start applying for new credit cards and loans. And they are afraid that something has happened to cause you to do this. They are wondering why you just got 3 credit cards and a vehicle loan today. Are you running out of money? Are you going to suddenly max it out and never pay it again? This will appear concerning to lenders. Therefore, the more hard inquiries you have on your credit report, the lower your score will normally be. Furthermore, if you are out there applying for new credit cards and loans, this will reduce your average credit length history, thus lowering your credit score even more. That's why many people tell me that they recently obtained a new credit card and their score has dropped by 50 points. So no, it was not merely the inquiry that caused this. The reduction in your total average length of credit history also had an impact on your score. The inquiry was simply a minor part of that. The good news is that all of this is only temporary, as hard inquiries appear on your report for the first 2 years and only have an impact on your score for the first 12 months. Then they drop off your report as if it never happened. The other good news is that if you are shopping around for an auto loan or a mortgage and need to run your credit multiple times with different lenders to get different rates, the FICO scoring method will typically group all of these inquiries together as one. So it will only affect you as if you ran your credit score once. So you can go to 5 different lenders for a mortgage and have them all test your credit score 5 times, but it will only count as one run. Certainly, as long as you do it in a very short frame of time, such as a few weeks apart, this is fine. This is to encourage rate shopping for you, the customer, without harming your credit score. However, this only accounts for 10% of your total credit score, so it is rather insignificant. However, in order to receive the Credit Karma Green Score, you must have had no hard inquiries in the previous 12 months. Now, realistically, I think having 0 inquiries in the last 12 months is rather ridiculous, especially if you're out there getting credit cards and getting bonus points and all that sort of stuff. So I think you'll be fine as long as you keep it to a minimum and are very selective about the new credit you get. Also, if you are in the process of developing your credit, it is probably advisable to take out a lot of credit now while you can, so that by the time you need a decent credit score, all of those hard inquiries will have dropped off your report. This is precisely what I ended up doing. I took out as much credit as possible while I was still working on improving my credit score. So 2 years later, I knew that if I needed my credit score, it wouldn't matter. After you have completed all of the above, I have a few final recommendations. First, I would strongly advise you to check your credit score every few weeks using a free site such as Credit Karma, or another excellent option is Credit Sesame. Both are wonderful resources that update your credit score every week or so. It will still be fairly close and provide an accurate reflection of your credit score. Second, you could try credit piggybacking, a technique for increasing your credit score. This is where you become an authorized user on a credit card owned by someone else with a long credit history. When you do this, their credit history may be reported on your credit account as well, potentially increasing your credit score significantly in the near run. It is crucial to note that not all credit card issuers will do this, and the FICO scoring process has cracked down on people who try to do so to artificially increase their credit scores. But I wanted to mention it because it is something that can work depending on your situation and how it is implemented. Now, I believe it is probably best if you establish your own credit report so that you have it with you no matter what. You don't have to worry about any of this, but I believe that if you are a parent and want to help your child, you should look into doing this, as you may benefit them greatly in terms of building up their credit score simply by doing this one little trick. Finally, by following everything in this video, staying consistent and being very specific with how you manage your credit, you'll be able to achieve a perfect score while saving and earning a lot of money. Now, I'll acknowledge that having a score above 780 wouldn't make a big impact. For example, an 810 credit score would not result in a lower interest rate when you try to buy a house than someone with a 780 score. And honestly, anything above 800 is purely for bragging rights at this point. So if you can keep your score above 780, that will help make you the most amount of money to you, the lowest interest rates, and get you to smash the like button for the YouTube algorithm if you have not done that already. So with that said, you guys, thanks so much for watching. I really appreciate it. As always, if you guys enjoy videos like this, make sure to subscribe and hit the notification bell so YouTube notifies you anytime I post a video. Also, feel free to add me on Instagram. I post it pretty much daily. So if you want to follow me there, feel free to follow me there. And thank you again for watching. Until next.